And then there were three. It seems we're on the verge of a full-blown bidding war for Morrisons. Well, Apollo Global is the latest US investment firm to show interest. It says it's considering making a rival offer to the one already accepted by the supermarket board. Well, that was a £6.3 billion offer from Fortress Investments Group. Morrisons shares are up sharply again today, so is this just the start rather than the end of a fight for Morrisons? Well, let's speak now to Richard Hunter. He's head of markets at Interactive Investor. Richard, very good to see you this morning. Obviously, the Fortress offer on Saturday morning that was announced is slightly lower than some Morrisons shareholders have been calling for. Do you think that's given Apollo a sniff here?
Yeah, very possibly. I mean, it's already, we're starting to see the light between the initial offer and where we currently are. When Clayton, Jubilee and Rice came in with the initial offer, it was at 230. Obviously, we've now got Fortress at 254. So we get into this situation where the market is clearly sniffing that there may be further developments with shares, as you say, up another 11% today to 266, obviously 5% or so above the 254 bid, which in theory, could go through simply because it's been agreed by the Morrisons. It looks as though both price basis but also business continuity. But obviously, when we get to this situation, we get here from the original bidders who've got 17th of July. Apollo have already confirmed that they're running the slide, so it doesn't seem to be end quite yet.
Richard, of course, fundamental to the acceptance by the Morrisons board of the Fortress offer was this commitment to uphold the values of Sir Ken Morrison, a promise not to sort of go really overboard with sale and leaseback agreements on the freehold assets. Is that something that every other bidder is now going to have to commit to?
I think they are, because obviously one of Morrison's attractions, quite apart from the cash generative nature of the supermarket as a whole, but Morrisons has around 85% of its estate freehold, so that's clearly another significant asset. And the Morrisons board will have been very mindful that they'd very much like to continue on the current track they're taking, which includes retaining that asset background, which obviously came into its own during the pandemic in particular. They're starting to build up a stronger online offering, although there's still somewhat behind rival. But in the round, you're absolutely right. I think that would be a sticking point for any future bidders coming in who were looking to somehow take the value out of the assets that come to the estate.
And that makes it quite a difficult calculation for any private equity bidder here, because if you look at Asda, well, the new owners there have gone straight for a sale and lease back deal. They're putting in very little of their own equity. Fortress and presumably Apollo are going to have a longer hold period with this asset and inject more equity, aren't they?
I think they are. And the interesting thing about Apollo, of course, is that the announcement that we heard quite recently, first thing this morning, was suggesting that they are certainly considering their situation at the moment. It may or may not get in time-honoured words. But by the same token, of course, we know that they have cash to burn because they recently just about missed out on their attempt to take over of Asda. So they've got a lot of work to do in a fairly short period of time because there's a lot of moving parts. And clearly, the Morrisons board have accepted an offer which has agreed to that.
Now, Richard, you mentioned earlier on the cash generative nature of this business and, of course, the fact that they own 85% of their property assets, the freeholds. Why has the market undervalued supermarkets like Morrisons over such a long period, and particularly after the pandemic, where they've all done pretty well by any objective measurement?
They have done very well. A couple of them have been able to ramp up their online offering very quickly. What had possibly been underestimated, and one of the things that's kept the lid on the share prices, is the pure cost, running to the hundreds of millions of pounds of revamping their stores to be pandemic friendly. Obviously, they've had staff on sick leave as well. So it's not been a slam dunk. Although, of course, the other side of the coin is that where those share prices have held back, it therefore makes a rather more attractive on valuation ground than they could otherwise have been. And of course, the other thing in terms of what is always fiercely competitive sector as a whole is you've got the growing presence of deep discount, which is also causing the big supermarket constantly over the shoulder.
In a word, Richard, I mean, is there any doubt in your mind that we are seeing the end of Morrisons' time as a quoted company on the London stock market?
I believe we are, Ian, yeah.
All right, Richard, great to talk to you this morning. Thanks for joining me. Well, a bit of breaking news to bring you from the